What is the ledger account for retained earnings? Have you ever wondered how companies keep track of their profits over time? One important aspect of this is the ledger account for retained earnings. Let's break it down together. Retained earnings representing the cumulative profits a company has earned and kept, minus any dividends paid to shareholders. This means that after a company earns money, it can choose to either distribute some of that money to shareholders or keep it for future use. When it keeps the profits, those funds are recorded in the retained earnings account. The ledger account for retained earnings is found in the equity section of the balance sheet. It is updated at the end of each accounting period. To do this, you add the net income or subtract any net loss for that period. Then, you deduct any dividends that were paid out during the same time frame. To calculate retained earnings, you start with the beginning balance from the previous period. Next, you add the net income or subtract the net loss for the current period. Finally, subtract any dividends paid out. The formula looks like this. Retained earnings equals beginning retained earnings plus net income or loss minus dividends paid. Understanding this ledger account is essential for both tax and accounting purposes. It helps assess a company's financial health and its ability to reinvest profits for future growth. For example, a company with high retained earnings may be seen as stable and capable of sustaining itself without needing outside financing. From a tax perspective, retained earnings are not taxed at the corporate level until they are distributed as dividends. However, the company's net income is taxed before retained earnings are calculated. This means that how retained earnings are managed can impact tax planning strategies for businesses. In the context of general ledger account types, the retained earnings account provides a clear picture of how a company's profits are being utilized over time. This information is essential for financial reporting and strategic business decisions. So, the next time you hear about retained earnings, you'll know it is more than just a number. It reflects a company's strategy for growth and stability.